Deven Choksey is still with us. Thanks for waiting, Deven. I just want your thoughts on credit access Grameen. You know, it's not for little reason that sometimes it is referred to as, the HDFC, like quality, at least in the MFI business. It's demonstrated that very strong growth numbers over a long period of time, and business has done exceptionally well. What's your sense? Would you buy the name?
Yeah, I think, Prashant, on operating parameters, the performance is absolutely brilliant. I think both on the year-over-year basis as well as on a quarter-over-quarter basis. When you see the growth in NIM, you see the growth in the AUM, the disbursement, and including, I think, provisioning. I think these numbers are absolutely, extremely convincing from that perspective. And maybe I think one of the points which I am looking at, in the interior segment in the country, there is a good growth coming up, and I think the demand situation remains extremely convincing from the consumption point of view. That's where probably I think some of these MFIs would start producing better results. In fact, I think many of the smaller ones also have been started producing relatively better results. As long as the economy continues to grow, I think this segment will produce relatively faster and super results as I see. Not too sure immediately whether I would buy into the stock, but I think definitely it's a case for considering in the portfolio.
Okay. The other stock I wanted to discuss with you was Oberoi Realty. Numbers came through, and we had the operational numbers earlier, but these are some stellar performances that we're seeing from the real estate companies. I mean, Oberoi Realty has seen its highest ever gross booking values of over 5,100 crores. But the stock has also had a fairly good run. It's up 20% from the lows in Feb. Do you see more upsides here?
You said it all, Sonia. I think most of the companies, in anticipation of the better results coming in, have had the significantly higher amount of run on the stock price. So from valuation perspective, I think they are early priced at this point of time. Maybe if one has to buy into the stock, in some kind of a corrective downside or a softness in the stock price, could possibly be a better time to buy into. I believe that I think the companies which are having higher amount of inventories with them are having better visibility at this point of time. And as a result, because of the bookings, of course, that they have done, that is why they have better visibility on the revenue and the profit front. But if the price matters, I think the valuation-wise, they have ran a little ahead of time as I see it currently.
Do you like the QSR space, Deven? I think Goldman, has initiated coverage in that space today. Barbecue has been in a slumber for a long time. It woke up a little bit, was up about 5-6%. But others have also been hurting, other stocks in that space. Your thoughts, and what do you like there?
Honestly, I think we feel that the demand side situation, is extremely convincing. Given the kind of a spending that the consumer is making, that there is no second thought on this particular subject of having higher demand continuing for most of them. However, I think one is not completely sure about, at what valuation one should be buying it, because if the growth is not seen sustainable for a variety of reasons in this format, then possibly I think higher valuation will hurt you at some point of time. So that is the only reservation that we have for adding this to the portfolio.
Okay.